Welcome back. You're watching us here on Bazaar Morning Call. Not materially changed for the gift nifty of the last few minutes, but let's see what the market holds for today. A couple of stocks on our radar, like we pointed out earlier. Amnish Aggarwal, who's the Director, Institutional Research at Prabhudas Lilladher Capital, now joins in. Good morning, Amnish. Two stocks on our radar. One is Bharti Airtel on account of that large block deal. The other one is Zomato on account of them opening up one of their internal tools for external sales as well. On both these stocks, your thoughts?
Yeah, hi Mangalam. First on your Bharti Airtel. You see, in many companies, we have seen that the promoters have been, you can say, pruning some stake here or there. So I think looking at the way the financials of the company are panning out, and today I think telecom is the most vibrant thing, and the business model looks very sustainable. And with the lag impact of the tariff hikes which happened last year is yet to play out fully, I think the next couple of quarters also should show very strong numbers from Bharti Airtel. So I think the offer is likely to be lapped up very easily, I think, and Bharti remains one of the top stocks as far as your telecom. And even if you look at, say, in case of, say, discretionary spending also, I think Bharti Airtel, you can say, ranks among the top companies today. Now, secondly, coming on to Zomato, you see, Zomato, we will have to see what the new, you can say, app or the tools which they are now opening up for the external people, how much, you can say, they can contribute over a period of time. But having said that, Zomato is always looking to enter, say, new segments. Suffice to say, today the major value for the company is getting created from Blinkit, which was an external acquisition, followed by their food delivery business. So while it is a positive, I don't think market is going to react anything in a very major way to this development, because we have got very limited, you can say, idea about these tools as of now and the scalability of the same.
Amnish, thanks a lot for staying by. Tell us about your view on the defense stocks. You know, a lot of them have come off the top. What's your top buys out there? And any view on Zen Technologies? Would you be interested? You know, the management has been talking about a very, very good order pipeline. Though delivery could be a little bit short in the near term, though they're talking about 50% CAGR growth over the next 3 years. Would you be interested?
You see, we haven't done any detailed work on Zentech per se, okay, so I won't be in a position to give my views on the same. As regards the other defense stocks are concerned, I think the outlook on them seems to be quite good, because the ordering has improved considerably over the past few months. And the way the government is looking at, say, ramping up the, you can say, production in the domestic sector, I think that actually gives a very good visibility of growth. Having said that, what actually happens is that many of these defense projects, whether it is, you can say, your Tejas orders for HAL or some of these submarines or frigate orders which come for some of these, you can say, Mazgan Dock or your ship, other these companies. Now, some of these are very long gestation projects. In some of these, for example, in the first 3-4 years, you will be booking just around, say, 40% of the revenues, and maybe in the 5th or 6th year, the full revenues will come. Now, whether these companies will grow, the answer is yes. Can the growth be a structural 25-30% kind of a number in top line? I don't think that is the way these companies operate. So whenever the booking of any large order gets completed in terms of execution, then you will see, you can say, more execution and numbers coming in. But having said that, many of these stocks have now corrected to much more reasonable levels. So, for example, within the ambit of some of the stocks we cover, Bharat Electronics is one such stock where the stock has corrected from 340, 350 levels. It is now trading at maybe around, say, 30 or sub 30 times FY27 numbers. And the advantage is that it caters to all the armed forces, whether it is your Army, Navy, or Air Force. The execution is strong, and the track record in terms of listing and delivering to shareholders is there from the last 30 years. So Bharat Electronics remains our pick in the space. But having said that, some of the other names also, well, I think they look good in the long term, and particularly so because they have now seen significant correction. But one should not expect the kind of return we have seen in the past. But I think a slow and steady climb from the lower levels can be witnessed in some of the defense stocks. So I think there is no reason to be, you can say, negative, but yes, one needs to be very selective in picking these names now.
Okay, fair point, Amnish, got that. Thank you very much.